Okay, so good day, everyone. So we'll be discussing about information produced by the entity or IPE, which is Module 5. To give you an overview, this module provides an overview of information produced by the entity or an IPE. So simply put, IPE is used in the audit process and can result from transaction processes or from information technology or IT processes. So this module will primarily focus on IPE that results from transaction processes. So to define, as we are focusing on transaction processes are events that lead to changes in an account balance. So as you might have had discussed during your accounting information systems, so basically, those cycles pertain to transaction processes. Further, to give you an example, the accounts receivable general ledger account balance is an accumulation of transactions that increase or decrease the balance. The event that increases an accounts receivable balance is the sale of goods to a customer on credit. Some of the transaction processes associated with the increase in the accounts receivable balance are receiving and processing a customer order. Number two, checking a customer's credit limit, checking inventory availability, verifying terms of payment, delivering the product, creating an invoice and billing, creating an invoice, and lastly, billing a customer for goods of service. Now, in relation to IPE, a listing of all individual customer account balances that make up the total accounts receivable general ledger balance would be an example of an IPE resulting from an accounts receivable transaction process. So basically, all those transactions coming into AR, and then AR producing what we call an AR report or an ARGL. So this is the transaction processes, and the AR report is what we call as the information produced by the entity or IPE. Now to contrast that, because we said that IPE can be produced either from transaction processes or IT processes. IT processes naman are computerized events that transform or deliver information through the accounting system. Now, going back to our example of the accounts receivable, so an IT process would be the system notifying the credit manager that a customer has exceeded a pre-established credit limit or the creation of a picking list so that the warehouse personnel can prepare a customer order. Okay? So, why is it important to have a knowledge of IPE? As auditors, in order to utilize IPE as reliable audit evidence, the auditor needs to determine that the IPE is sufficiently complete and accurate. Okay? So, for example, when we talk about the AR ledger or the AR report from our previous example, we have to be sure that that accounts receivable report is actually complete and accurate because all of our subsequent steps, for example, determination of recalculation of bad debts, selecting proper samples, double checking the population. This will all revolve around the completeness and the accuracy of the information produced or provided by the entity. In addition, for an example, if an audit procedure is to develop an expectation of sales revenue, the auditor could apply standard prices to the records of sales volume to develop this expectation. And therefore, the reliability of this expectation is affected directly by the accuracy of the pricing data, which is an IPE, and the completeness and accuracy of the sales volume data, which is another IPE. So your expectation is directly based on this IPE. And therefore, if you are not sure whether this IPE where you will base your conclusion is not complete and accurate, then therefore your expectation that was developed through the use of this IPE might also be inaccurate or incorrect. As another example, if the audit procedure is to test a population of data for a certain characteristics, for example, we are testing that all payments has met the criteria for authorization. The results of the procedure will also not be reliable if the population or IPE from which the items are selected for testing is not complete. As we have known from doing sampling, you have to be sure that you have the whole or complete population first before you can have a reliable and accurate sample. So also recent PCAOB inspections and peer review results indicate that auditors are not always performing the appropriate audit procedures to evaluate whether the is sufficiently reliable for the auditor's purposes, including obtaining audit evidence about the completeness and accuracy of the IPE, and evaluating whether the evidence is sufficiently precise and detailed for the auditor's purposes. So, because historically speaking, and probably some people, as we become more reliant on ERP or accounting systems, when we are doing audit, we tend to rely on the reports immediately given to us by the client or the auditee without doing these additional steps to verify whether is that complete, is that list accurate. Okay, that puts into question the reliability of that being used as an audit evidence. So this module will cover an overview of the following: relevant guidance, what is an IPE, IPE that results from a transaction processes, what is the flow of IPE, the audit risks related, and the audit procedures to address these audit risks related to IPE from a transaction process, and examples of IPE that results from an IT process. So the relevant guidance for the testing of IPE and the understanding of the underlying measures under which IPE is produced. We have ISA 500, Chapter 9, or Section 9, AICPA AUC 500.09, and PCAOB AS 15.10. Again, what is IPE? So beyond manually prepared information, entities use IT applications or other computing tools to collect information, process information, store information, report information, transform information by an end user. So this is called end user computing or EUC. For example, you have SAP, you have generated a file, then transform that file using what we call end user computing or Excel in order to use that report. Where an end user or a person who is using that report who is not technically a software programmer can easily program with supporting tools such as a spreadsheet. So all of this is considered to be IPE. So what are the examples of IPE that results from a transaction process? So IPE that results from a transaction process includes information that, for example, number one, shows the detail of balances. For example, AR analyzes balances. The result of processing proves results, shows computations, supports journal entries with or without manual action, shows processing issues, and shows changes to the data. This also serves as the input for models that are used to determine estimates or allocation. For example, if you are using AR listing and you are developing an estimate for AR, this also serves as a population for selecting sampling items to test, as we have discussed, and is from a service organization in the form of any of the above. So IPE does not include bank statements, vendor invoices, legal contracts, and other documents produced because these are produced by vendors or other third parties that are not part of the entity system of internal control. So these are third party documents and therefore not considered to be IPE. So what is the flow of the IPE related to transaction processes? So IPE can produce in a variety of different places along a transaction process. So understanding where in the transaction process the is produced helps the auditor understand the audit risks related to the IPE, and so that we can design appropriate audit procedures to evaluate whether the information is sufficiently reliable for the auditor's purposes. With the previously stated objectives to, number one, obtain audit evidence about the completeness and accuracy of the information and evaluate whether the evidence is sufficiently precise and detailed for the auditor's purposes. So the following diagram on slide page 13 illustrates the flow of IPE, which we have noted in yellow, in a transaction process from the input of data into the IT application through the processing of data, the collection of process information, and the computations and categorizations processed by the IT application, resulting in the output from the IT application, whether in electronic or paper format. In some cases, this output then may be transferred directly or manually into an EUC tool for further manual computations and categorizations before being output from the EUC tool. Okay? So again, from the previous discussion or from the previous page, this diagram illustrates how IPE flows from a transaction process. So it starts with the input into the IT application, which is usually data for a significant class of transaction or SCOT. So the IT application, probably an ERP or a single application, would process data, would collect process data for output, and compute and categorize process data for output. Now, this application would output either data or report in electronic format or the paper format. And this output, whether electronic or paper, can be directly or manually transferred. So meaning directly transferred, ibig sabihin nakalink siya probably through the internet or LAN, while manual transfer is that somebody manually transfers the data from the application into the EUC tool. So EUC tool, as we have discussed, this can be in the form of, for example, Excel. And then the user would perform manual changes, would output the report from the EUC tool. So what are the audit risks stemming from this flow? So the auditor will need to consider the following risks with respect to the completeness and accuracy of IPE from a transaction process produced by an IT application. So there are a total of 5 risks. We'll go over each one. First risk. So this is the risk that the IT application is not processing data correctly. So the data is incomplete or inaccurate. And that is, not all transactions or other events that should have been recorded, or transactions may have been recorded inaccurately. So this risk usually is within this process. In the processing of data, mali ang capture, or it has been incomplete or inaccurately recorded or transferred. So the errors associated with this IPE risk typically occur when the entity's controls within the transaction process do not function effectively. For example, the established edit checks in an IT application to validate that the quantity input is within a certain limit do not function as designed. And as a result, the incorrect quantity amounts are processed by the IT application. So halimbawa, processing ng orders mo. Okay? So ang available inventory lang ay, for example, 10. Okay? If the application is programmed correctly, when you are inputting an order, the system should automatically check whether there is enough available items. So hindi dapat more than 10 yung ma-input from the order. Okay? So when this edit check is not working, so pwedeng 11 na malagay niya, 15, 16, no, instead of the correct amount. Okay? So kung hindi rin gumagana yung tinatawag nating edit or validation check, maaaring malagyan niya yan ng -1 or really omit the amount, and so that the order will still push through without any quantity indicated. Okay? Risk 2 is when the data extracted from the IT application into the IPE is not the intended data or is not complete. So usually that risk is within the collection of process data for output. So errors associated with this IPE risk typically occur because the data selection instructions in the IPE definition program are inaccurate or different from the user's expectations. So for example, a user develops a report writer to produce a listing of sales worth 5,000. So sabi niya, lahat ng sales greater than 5,000. However, due to improper instructions, the report only included credit card sales and excludes other sales that are for the amounts more than $5,000. So, ibig sabihin, dapat yung sales include sales which are made in cash, credit card, and other credit. However, when the report was generated, only those items which are related to a credit card has been produced. Therefore, the report or the IPE is not complete. Okay? Okay. The next risk is risk 3. So risk 3 is that the computations or categorizations performed in the creation of the IPE from the IT application are inaccurate. So compute and categorize process data for output. You might ask, no, how does this differ from the second risk where one of the categories has not been included? Okay, so risk 2 precisely deals with the fact that the item has been omitted from the whole report. Okay, so directly impacting completeness. Risk 3 focuses on all the items being complete. However, it is not accurately grouped or categorized. So errors associated with this IPE risk typically occur because the IPE definition program doesn't contain the expected instructions for the computations or calculations made by the application. So for example, the total shown on a report listing individual customer accounts receivable balances that make up the total balance of the general ledger does not equal the correct amount. Okay? So mali yung pagkakagroup or categorize ng accounts receivable. Okay. So further, for example, dun sa risk 2 example natin, may cash sales, may credit sales, meron ding credit card sales. So sabi natin, credit card sales ay nandun. Pero hindi properly nakategorize yung credit sales. So, kahit hindi siya credit card driven, nasama siya doon sa credit sales. So while the report is complete, hindi siya accurately stated as part of the credit card sales. Okay? Next, risk 4 and 5 are similar. So when IPE is extracted, so risk 4 and 5 is when the IPE extracted from data that originates from an IT application and is then output into an EUC tool. The auditor needs to also make certain of the completeness and accuracy of the transfer of the information from the IT application to the EUC tool, information that is added or changed using the EUC tool, or computations or categorizations performed using the EUC tool. Just to differentiate the two, risk 4 is that output from the IT application into the EUC tool is modified or lost. While risk 5 is that the output from IT application into the EUC tool, or the output from the EUC tool is incomplete, or data is missing, or inaccurate data has been added, changed, computed, or categorized incorrectly. Okay? So it's not really necessary that data is preserved. Okay? The fact that it's loaded or put into an EUC tool, the goal is to add data into it or categorize that information. And therefore, we should just ensure that the proper categorization, additions, or any operations has been properly done with the IPE. Okay, continuing on, as stated earlier in this module, so sabi recent PCAOB inspections and peer review results indicate that auditors may not always be performing the appropriate audit procedures to evaluate whether the IPE is sufficiently reliable for the auditor's purposes, including obtaining audit evidence about the completeness and accuracy of the IPE, evaluating whether the evidence is sufficiently precise and detailed for an auditor's purposes. So these audit deficiencies were identified most often with risk 4 and risk 5. So when an entity uses an Excel spreadsheet or other EUC tool to maintain or summarize some of its accounting information. To reiterate, risk 4, so when the data from an IT application is output directly to an EUC tool, the auditor should consider the following risks, risk 4 and 5. So risk 4 is that data output from the IT application into the EUC tool is modified or lost in the transfer. So here, from the IT application, the output direct transfer into an EUC tool. So errors that are associated with this IPE risk often occur because larger numbers may be truncated or omitted when exported or lines of information are dropped in the transfer of information into the EUC tool. So, for example, a retailer exports quantities and prices at each retail location from its inventory application into Excel for the purposes of determining its quarter end LIFO reserve amount. However, for one geographic region of the country, the data transferred is from the previous quarter end rather than the end of the current quarter. So, mali yung na-transfer na information. Risk 5 naman is that the information added or changed, including computations and categorizations using the EUC tool is incomplete, inaccurate, or inappropriate. So when manual transfer is involved, especially from the IP application to the EUC tool, and manual changes done in the EUC tool to a final report, that's risk 5. So errors that are associated with this IPE risk typically occur because the programming of the EUC tool is not consistent with what the user intended, or the user erroneously or intentionally modifies the information in the EUC tool. So for example, an Excel file used to calculate the company's property tax expense accrual for its various pieces of real estate is incorrect because there is an error in the formula that is used in the calculation. So of course, because the incorrect formula was used, therefore the whole report would be incorrect. Now, as auditors, what procedures do we do to address audit risks related to IPE from a transaction process? So the auditor can address audit risks related to the IPE from a transaction process in the following ways. First one, auditing procedures for the specific account balances, testing controls over the creation of the IPE, substantively testing IPE, or using a combination of test of controls and substantive testing. We'll discuss one by one in the following slides. So first one, auditing procedures for specific account balance. So obtaining audit evidence about the accuracy and completeness of IPE may be performed concurrently with the actual audit procedures applied to the IPE. When obtaining such audit evidence is an integral part of the audit procedure itself. For example, when you receive an accounts receivable subledger printed into a paper, which is an IPE, shows information about each outstanding sales invoice by customer and comprises the total of the accounts receivable account. Okay? So in terms of the flow of the IPE, the subledger represents the output from the IP application in paper format. Therefore, the auditor needs to address risk 1, 2, and 3 as shown in the following diagram. Okay? So risk 1 and 2 can be addressed through the audit procedures of receivable confirmation and reconciling the subledger to the general ledger, while risk 3 can be addressed through the audit procedure of verifying that the report correctly calculates the total. So we do a recalculation or recomputation. Next, testing controls over the creation of an IPE. So when the auditors believe, based on gaining an understanding of the controls, that the entity has effective internal controls over the processes that produce the IPE, the auditor may choose to test the effectiveness of those controls. For example, risk 1, controls over the completeness and accuracy of the data presented in the IPE function as expected. So as discussed earlier, errors associated with this risk typically occur when the entity's controls within the transaction process did not function effectively. So for example, the established edit checks in the IP application to validate that the quantity input is within certain limits or to validate that approval from an individual other than the preparer of a transaction exists did not function as designed. So as a result, the audit procedures performed to address risk 1 are most often test of control procedures to determine whether the controls are designed effectively and are functioning appropriately. Risk 2, the system functionality that extracts the data, operates as expected, and risk 3, the system functionality results in accurate computations and categorizations in the IPE. So in many cases, internal controls over the transfer or input of data into EUC tools like Excel or over the changes and calculations made by the EUC tool may not exist or may not be sufficient. To make certain that the IPE is sufficiently reliable for the auditor's purposes. As a result, in many cases, it will be difficult for the auditor to test internal controls to address risk 4 and 5, and thus the auditor will need to apply more extensive substantive testing to address these risks. Okay? Uh, One moment. Okay. Risk 4, controls related to the completeness and accuracy of the transfer of information from the IT application into the EUC tool function as expected. So as discussed earlier, no errors associated with this risk often occur because larger numbers are truncated when exported or lines of information are dropped in transfer of information into the EUC tool. So hindi buo na nata-transfer. To address risk 4, the auditor might choose to identify and test controls related to the completeness and accuracy of the transfer of information from the IT application into the EUC tool. So we are going to be testing what we call as interfacing controls or interface application controls. Okay? For risk 5, controls that are in place over the changes that occur using the EUC tool function as expected. So as discussed earlier, errors associated with this risk typically occur because the programming of the EUC tool is not consistent with what the user has intended, or the user erroneously or intentionally modified the information in the EUC tool. So to address risk 5, The auditor might choose to identify and test controls that are in place over the changes that occur using the EUC tool. So typically, this is what we call an IT-dependent manual control. So because auditing standards state that sufficient evidence regarding an assertion cannot be obtained from only testing controls, the auditor would also need to test the IPE, for example, the report itself, to confirm that the IPE contains the correct data and that the data presented and that the data is presented correctly in the IPE. So for example, an IT-dependent manual control is tested to address what could go wrong in a purchasing process when invoices are approved but goods have not yet been received. So a clerk reviews a report of purchase invoices that are not matched with the goods received notes and investigates each one to determine whether an adjustment is required. In this example, so the IPE is the report of unmatched purchase invoices. The auditor would perform procedures to determine the completeness and accuracy of this report as they test the manual aspect of the IT-dependent manual control. However, because controls were tested, the extent of this testing is reduced from testing necessary if only substantive procedures were performed. Next, how do we do substantive testing of IPE? So performing substantive testing involves comparing information with and from source documents to test the completeness and accuracy of the IPE. So substantive testing also includes testing clerical accuracy, computations, and relevant categorizations. For IPE use in the auditor substantive procedures, this test of IPE would be performed at the same time the substantive procedures are being performed. Of course, this is to address audit efficiency. Now, to substantively test IPE, for example, the risk 2 and 3, as discussed earlier, errors associated with these risks typically occur because the data selection instructions excuse me, in the IPE definition program are inaccurate or are different than the user's expectations. As a result, the audit procedures performed to address risk 2 and 3 often are substantive in nature and could include reviewing the programming instructions that generate the IPE or testing the completeness and accuracy of the IPE as part of the auditor's substantive procedures over the related account balance. So as an example, if the auditor uses the age list of inventory movement when testing management's provision from obsolete inventory, the auditor would test whether the data extracted from the IT application into the IPE is the intended data by testing a sample of older inventory items noted during inventory observation. So from the inventory list that crossed over with your inventory observation. Okay? The auditor would then determine whether they are properly included on the report. So, if you have noted obsolete items during the inventory observation, that should be included in the inventory list that would be used to determine the provision for inventory obsolescence. And further, whether the calculations in the report are accurate by recalculating the amounts therein. For risk 4 and 5 are usually tested substantively. So the auditor must make certain that information in the EUC tools like Excel is complete and accurate by understanding the sources of the information, testing whether the information was accurately and completely transferred from those sources into the EUC tool, and determining that the information added or changed, including computations and categorizations, using the EUC tool is complete, accurate, and appropriate. So, for risk 4, the auditor might choose to perform substantive procedures such as comparing the record counts and the amounts from the IT application with those amounts in the EUC tool. Okay? So for example, from SAP or RP, tinignan mo yung AR balance, kinompare mo dun sa nakalagay sa Excel report. So as discussed earlier, for risk 5 naman, the auditor could choose to perform substantive audit procedures such as reperforming a sample of various calculations and categorizations made by the EUC tool, or exporting the data from the IT application into the audit software or auditor-controlled version of the EUC tool and reperforming the calculations and categorizations of the EUC tool. So for example, from SAP, the company uses the EUC tool to perform the aging. Ang gagawin mo as an auditor, you also extract an AR listing from SAP and then recalculate or re-perform or redo the whole report and then compare the two. Okay? Okay? That's all for IPE resulting from a transaction process. Now, we also have IPE that results from an IT process. So IPE related to IT processes is used by the auditor when testing IT processes themselves. For example, in testing controls over program changes, the auditor may obtain a list of all program changes made during a specific period of time. So IPE related to IT processes include information that shows the result of activities, for example, listing of approvals, a list of specific items, for example, access listing, serves as a population for selecting sample items to test, evidence of a system setting, or is from a service organization in the form of any of the above. So for IPE related to IT process, the audit risks are essentially the same as the 5 risks described previously. And the auditor would design audit procedures focused on those risks to make certain that the IPE being used is sufficiently reliable for auditors' purposes. So for example, if the auditor were testing controls over program changes, so of course, di ba yung mga SAP, for example, may mga program changes or katulad ng mga application nyo sa phone would have some updates. No? In enterprises, these changes or updates are being monitored and approved and being listed. No? Okay. So if you were testing controls over that updating, kasi hindi pwede basta-basta yung update because that might result into the application not functioning as intended anymore. So you're testing the controls over the program changes and requested a listing of program changes made during the first 9 months of the year under audit. It would be important for the auditor to consider risk 2 that the data extracted from the IT application into the IPE is not the intended data or is not complete. And as part of the auditor's procedures for testing controls over program changes, the auditor would perform procedures to make certain that the listing obtained was complete and accurate. For example, that this list really contained all of the changes that were made from the previous for the period requested, and that data requested regarding those programs changes was accurate. Okay, now to summarize, auditors encounter IPE throughout the audit process when it is used by management in performance of controls that the auditor is testing. The auditor uses IPE as audit evidence for substantive tests. The auditor uses IPE as a population from which to select items to test. And auditing standards require that when using IPE, the auditor needs to evaluate whether the information is sufficiently reliable for the auditor's purposes, including, as necessary, obtaining audit evidence about the completeness and accuracy of the information, evaluating whether the evidence is sufficiently precise and detailed for the auditor's purposes. Auditors should consider the audit risk associated with the IPE and design and execute audit procedures to address these risks. Okay, so this is just a summary of the flow of the IPE and all the associated audit risks from risk 1 to risk 5. Okay, so that ends our discussion for Module 5, Information Produced by the Entity or IPE. Thank you.